right, this is Good Morning Nigeria once again. Thank you for staying with us. Time now to commence our discussion. And as we said earlier on, we have been discussing on various, of course, aspects of national development in the past 20 years. We've assembled guests this morning to look at other aspects of our economy moving forward. Just before we introduce our guests, let's listen to the background report put together by Abdul Salam Jubril.
If we have a national development planning culture, it involves consultative process across vertical and horizontal level to incorporate sectoral development needs and interventions across priorities so that the issue of constituency projects, the timeline of 6-7 months dissipated over budget will have been destroyed. And luckily enough, recently, the Adamawa State Governor has asked me to come and restructure the Adamawa State Planning Commission. And when I bring that law to him, he said that he's going to send it to the State House of Assembly quickly so that as we develop the Adamawa State sector strategic plans and the medium-term plan of 5 years, it's not for the Adamawa State Governor or Commissioner, it's for the people of Adamawa State because it will follow a consultative process to incorporate the needs and wants of the people.
The first time in the history of this country's democratic governance, we have a president called President Muhammad Buhari who came in despite the fact that he is not and has never been a member of the People's Democratic Party. Much of the policies that he felt were excellent and good enough to be continued, that were started by President Goodluck Jonathan, he did continue with them. For example, the agricultural policy, the Empower, the rail issues, they were all project continuities that we could allude to the fact that President Buhari, basically grabbed them and continued with them. Definitely, Professor Dharma has a point there. There is need for continuity. The country is bigger than all of us, even collectively, not just one individual. So why should there be a bit of topsy-turvy, a bit of policy somersault?
You see one Anchor Borrowers program, and then you start saying, have we not been having agricultural program for the last 20 years? You know, what is special about this? It is special because of the way it delivered end-to-end intervention in selected value chains and poured resources, and used both two-lane, focusing on the large commercial farmers, yes, who are anchors or aggregators, and then reached out to subsistence farmers to integrate them into the global supply chain. So that's remarkable. It's not rocket science, but it's remarkable and has been delivered.
All right, those were excerpts from the conversation that we had yesterday. We already have guests with us here in the studios as well as at our network centers. Let's welcome the guests that we have here in the Abuja studios. They are also familiar guests whenever we are discussing matters relating to the economy. Dr. Emeka Okengo, development economist. It's a pleasure to have you with us.
An honor to be here. Good morning. Good morning, Nigerians.
Also here with us at the studios, an investment expert, is Niye Akinsiju. Niye, delighted to have you with us on the program.
Pleasure always. Thanks so much.
Okay.
And let's move on to our network centers. And we will be having from Kaduna studio, Professor Mohammed Mutaka Usman. He's of Department of Economics, Ahmadu Bello University in Zaria. And there you have him. Professor Usman, thank you very much for joining us.
It's my pleasure to be here with you.
And from our Lagos Network Center, of course, we have two guests seated there. You have Mr. Tilewa Adebajo, who is a financial analyst. He's also not a new face. He's a very familiar face. And Johnson Chukwu, a capital market expert, also one of our own, should I say, in-house experts. Both of you, I'd like to thank you for joining us.
All right, gentlemen, once again, welcome to Good Morning Nigeria. But now, let me just state this. Yesterday, when we had the conversation, Shuaibu Idris, a financial analyst, joined us from our Lagos Network Center, and he did say, somewhat jocularly, that in Lagos, he takes the last question amongst all the guests. That will begin with the guest in Abuja and then go to him, and then by which time he will be wondering what to say. But of course, he had his own trove of ideas to deliver on the conversation yesterday. So today, let's say charity will begin abroad, rather than beginning with us at home. So let's go to our Lagos Network Center and get our guests to begin their comments. Tilewa Adebajo has already been introduced along with Johnson Chukwu. Gentlemen, Nigeria has been on a democratic journey, Fourth Republic, for 20 years. In your opinion, what have been the milestones? Let's begin with Tilewa.
Thank you very much. What you're asking for is a 20-year review of the Nigerian economy. And I think that is really a mixed bag. If you take a look at the economy 20 years ago, let's see where we are, what we decided to do. We have all kinds of programs that we put into place. We've heard about the Vision 2020, the Millennium Development Goals. And I think that this 2020, next year, I think it's a good time for us to review the economy of Nigeria as a whole. But if you take a look at the impact of the economy in the last 20 years, I think what we have tried to do, I think, is to have a private sector-led economy. But unfortunately, inconsistencies in policies have not really delivered the results. The privatization program, I think, was carried out. A lot of key parastatals like in power, telecoms, banking, all those sectors have been deregulated. And I think that we've seen the impact of a deregulated banking sector. We've made success in that area, in banking. We've made success in the telecoms space. In terms of all the other areas, in terms of like agriculture, manufacturing, and in terms of self-sustainability, I think that is really where we really have the challenge. So it's been a mixed bag. While we say that we want to have a private sector-led economy, we still have challenges. The privatization of the power sector, I think, still needs a lot of structural reforms to make that more effective. So we need to take a look at this in a holistic perspective in terms of where we've made success, where we've made some like I would say some giant strides, but still we haven't crossed the finish line in quite a few things. Infrastructure development, for instance, we're still way behind. And the whole essence of letting the private sector get involved and being able to raise capital on a sustainable basis to fund these infrastructure projects, I think is really where we have the challenges. Sustainability has been a key problem. If you take a look at the economic metrics, I think in 2010 we achieved the highest, in the last 20 years in 2010 we achieved the highest economic growth. Nigeria's economy grew by 8.5%. The GDP growth was 8.5% in 2010, 2011. 2010, 2011, 2012, that was when we experienced the highest economic growth, even though inflation was at 12%. How have we managed our resources and what the results have been? Our GDP went to a high of about 500 billion, and but unfortunately that has dropped. So whatever gains we have now, if you take a look at the metrics, the economic metrics today, I think compared to 20 years ago, you have 100 million Nigerians in poverty. The economy can only grow about 2%. And we have challenges. The Economic Recovery Growth Plan that was put out 4 years ago has not really met all the targets. The Economic Recovery Growth Plan was supposed to have the economy growing by 5% this year and 7% the next year. So, but unfortunately, we haven't met those targets. So what I think is important is for us to have a relook of the economy. We need to press the reset button. There are 4 pillars of the economy we need to consider. While the central bank might have put out a 5-year plan, I think it's important that the central bank should hold back on those plans because that is only one side, because that's only monetary policy. We need to have more of a coordination of the economy and structural reforms to achieve growth. So we need somebody who is going to sit in the middle and take charge and control and coordinate monetary policy, fiscal policy, trade policy, and investment policy. And if we can have somebody controlling this within this government, then to be able to see through some structural reforms, then we can begin to see a change and getting the growth that we desire. Because right now, this economy growing at 2% is not going to work. And I think as the president has acknowledged, his challenge now is how he's going to take 100 million Nigerians out of poverty. And one of the biggest problems Nigeria is facing now is the fact that its debt profile is no longer manageable. We're currently spending 65% of our revenues to service our debts. That is not sustainable. The state governors also have to begin to imbibe some fiscal discipline. Apart from the fact that they've got bailout funds, I think it's important that they also pass fiscal responsibility acts within their state legislatures, just as the federal government does, to be able to limit how it can work. So overall, it's been a mixed bag. We've made a lot of giant strides and progress in certain areas. In some areas, we've made giant strides, but we haven't crossed the finish line. But right now, the challenge we face is a structural challenge to grow this economy and lift 100 million Nigerians out of poverty and grow the economy at 8%. We still have not seen those policies. So the central bank has set out its own policies. We need to see what the fiscal plan is. We need to see the trade policies, and we need to see the investment policies. And we need somebody who is going to coordinate these four pillars to ensure that we get sustainable economic growth and give Nigerians the dividends of democracy and the sort of middle class that we deserve.
All right, Tilewa, thank you. I wish we could just say thank you and end this program, because you have touched on all aspects of the economy. But let me also bring in Johnson, who is seated right there with you, to also have his own initial evaluation of our economy in 20 years. And Johnson, if you consider comparatively with other world economies, and also, you know, putting in mind rebased GDP, even though I hear it's now down from the initial $500 billion. Where do you situate our economy? Are we still developing, or are we middle income, or are we developed?
Well, let me start from the rebasing of the GDP. As you rightly pointed out, in 2014, the GDP was rebased from $270 billion to about $510 billion. That was an increase of about 89% of the based on the base that we had before the rebasing. At that point, we saw a per capita income of that was approaching $4,000. But unfortunately, like you also pointed out, we've seen a decline in the size of the GDP. We are currently dealing with about $386 billion GDP in the economy. And what has also happened is that we've seen a deterioration in our per capita income. Currently, our per capita income is just barely $2,000, which is actually below where it was in 1999 when we became independent, when we went back to the current democratic experience. And look at what has happened over time. In 1999, our population was just barely 112 million people. Today, we are approaching 200 million. So we've seen an increase in population that's approximating 100%. But the GDP has not expanded that much, because GDP in 1999 was just about $200 billion. So in terms of growth, we saw a growth from about $200 billion to about $510 billion in 2014, and a decline in GDP that has now come down to less than $400 billion. Secondly, on the other side, we've seen a consistent growth in our population over the past 20 years, which has led to the share per person of the GDP deteriorating from about $3,500 to about just less than $2,000. So we've seen an expansion in the GDP, but a contraction in the income per head, and therefore a deterioration in standard of living and an increase in level of poverty. So that's the challenge we have. But beyond that, we've also seen a fundamental shift in the GDP. In 1999, agriculture and oil and gas accounted for 50% of the GDP. Agriculture about 22% of the GDP. Oil and gas was about 29% of the GDP. Today, agriculture still accounts for about 22-23% of the GDP, but oil and gas has contracted to just barely 9% of the GDP. So we've seen an introduction of new economies into the structure of the Nigerian economy. We've seen an increase in the share of ICT from less than 2% to about 13% of the GDP. That, for me, that's part of the new economy. You've also seen an increase in trade, share of trade, from about 12% to about 17% of the GDP. So you've seen some level of adjustment in terms of the structure of the GDP, but we've not seen the kind of expansion that is commensurate with the growth in population. And that's where the core of the problem is. So in terms of structure of the GDP, we've seen a shift in the structure, but we've also not seen a shift in earnings, foreign exchange earnings. We still depend on oil and gas to account for more than 80% of our foreign exchange earnings. And that's also why we talk of mono-export economy. We've not been able to restructure the export earnings, but we've structured the productive base of the economy. So you've seen some improvements, but we have not seen the kind of improvement we need to position the economy as a middle-income economy. We're instead of being a middle-income economy, we've actually seen a deterioration in our per capita income, which I have emphasized earlier. And when you talk of whether your economy is a middle-income economy or it's a small or poor economy, it all depends on your GDP per capita. So today, our GDP per capita has deteriorated, and that's why we're dealing with high level of poverty. We talk about 94 million Nigerians living in abject poverty, living on less than $1.9 per barrel. Sorry, $1.9 per day. And that is a deterrent. We're not talking about 23% of Nigerian population that are unemployed, because the economy is not expanding at the rate the population is expanding. And for me, the challenge the government has, or policymakers have, is to grow the economy. Like the CBN governor said, we want to grow the economy at double digits. We need double-digit growth to be able to not only create jobs for those who are joining the labor market, but those who are already in the labor market that have no jobs.
All right, Mr. Johnson Chukwu, thank you very much. We'll return to one other aspect later on in the course of the conversation when we touch base with you gentlemen in Lagos. Let's go over now to our Kaduna Network Center, where we earlier introduced Professor Mohammed Usman, who is of the Department of Economics at Ahmadu Bello University in Zaria. He's with us from our Kaduna Network Center. Professor Mohammed Usman, give us a sense of what you think, have been the high points and low points of the economic management of the Fourth Republic.
Yeah, thank you. I think is very clear on understanding the scenario in 20 years. It's a mixed grill, because one, there is high points at which the management of the economy has made some headway. There are some also low side of the issues. One of the high side is the recapitalizations of banking system, but even the recapitalizations make the bank strong, but they don't perform their functions very well, because their main functions to the economy is to mobilize saving and channel it for investment, which we find in the 20 years has been not quite good. Also, one of the bad side also is really what they bring to annual budget. Annual budget becomes a rituals. In the early from 1999 to 2011, the budget can be passed, nothing can be done, no project has been taken, then the money disappears. Also, on high point of it, there are institutions established to check corruptions, and which also help in reducing some level of decency in the economic system. On the other side also is really the massive looting within these 20 years, if you compare it with the previous years, this has the largest chunk in terms of the looting of the treasury, and therefore high-profile looting has been established in that period. On the good side of it is that there are some issues in terms of fiscal side of government. Fiscal Responsibility Act was established, and they are making some headway in it. There is also the issue of revenue. Nigeria has earned the highest income within these 20 years. I think you should not ask me whether that is commensurate to what we are seeing in terms of development. That's another things to discuss entirely. So one of the major points in these 20 years is lack of coordination between the fiscal arm and the monetary arm of government, whereby each individual's, each sector, either the monetary, the central banks are doing what they felt is right on their own right, and therefore the coordinations that's supposed to be taken is not giving results. And you can also see that from the National Economic Council. They meet every month, so the coordinations of the economic policy within that period have not shown desired results. And fundamentally, one of the most striking thing within the economy at that period of the 20 years is that there are so many cyclical fluctuations that the economy has undergone. Some of the recession we had in 2016 and able to come out of the recessions. And these are some of the things that get concerns. And in terms of population and growth, you will find out that economic growth is not reflecting to attack the level of population growth we have. And in that case, something has to be done within that context. So in the last 20 years, it's a mixed grill whereby there is ups and downs, and where the most fundamental issues is that there is no synergy in coordinating economic activities and economic policies, as it were, in the country.
Right, Professor Usman, thank you. Back here in Abuja, let me begin with Dr. Meka Okengwu. Dr. Meka Okengwu, you know, the guests have all talked about a mixed grill, you know, in 20 years. Yet we had an economy that was growing, you know, between 7 and 8%, and one that is down to about 2% in the first quarter of 2019. And that shows a real wide gap in terms of, you know, growth. So where do you situate, you know, the problem? Is it inappropriate policies or lack of coordination, as Professor Usman had, you know, teed off?
Okay, thank you. Usually, anytime I have this conversation, I say, let's take it from the back end. And let me start by just a simple definition of democracy. They say it's government of the people, by the people, for the people. So it's all about the people. So I like to take my own analysis from the people. Because when you now talk about people, you build infrastructure for people. You make laws for people, okay? You're supposed to be securing people. Now, let's look at even our population as a plus or a minus. When you have a population that is capitalized, as it were, it becomes, you know, some kind of gain. What we have in Nigeria is that we keep talking about our human resources. Now, these 100 million people that you're going to be lifting out of poverty, are you going to be giving them bread and tea? What will be the basis? What will be the minimum of now defining who is poor? Would it be everybody who is able to afford a house, afford transport? So we must be able to look at it from the back end. You see, every other person in the studio has talked about, you know, what you might call the technicalities of the problem, figures. okay, that are rising and changing. But what is most critical in any economy to grow is your capacity to turn your human resources into human capital. This is where your skill sets come in. This is where your education come in. What is important with that human capital is what you also do with your natural resources, okay, which is a value you add to what you call your natural resources. Today, people, I give a very typical example. There's one they call sparkling water and normal water. It's all water. Now, something is added to that water to make it sparkling, and it has more value. Am I making some sense to you? I give a typical example with iron ore. A ton of iron ore in Nigeria is worth about $200. You take it to China, it becomes about $10,000. You take it into Europe, it starts ranging about $50,000. Why? Because we bring it out as raw iron ore and sell to China that turns into pig, rot, or steel or whatever. They now take it into Europe and it begins to turn into parts of Bugatti, of Ferrari, of wristwatches, okay, of all sorts. So in discussing what has happened, what I wanted us to take it from this perspective is that the moment we focus our arguments on how people's life has been able to improve and what is improvement, one will now begin to talk about the three basics. Housing. How has our policies engendered what we call local content in housing development? Okay? 2, housing means shelter. 2 is clothing. And each time I come in here, I look around and I see all of us dressed. When I came in, Kingsley called me Igwe, simply because I am wearing what is, seen as what the people from my own part of the country wear. But for crying out aloud, this is either Indian or Malaysian, no matter what it is, and so like every other person here. So to what extent have we also, as a country, been able to now develop these policies that can support, okay, the second most important need of man, okay, which is clothing. Now, the third, you come to food. We keep talking about agriculture, and each time I have this conversation, I tell you that agriculture, in its simplest elementary interpretation, is the study of plants and animals. Maybe you cannot take some aspect of it, which we have not looked at as a major policy. And what is this? Food production. It's not the same thing with agriculture. Okay? This is where you now have your food security. Most of these ministries will have, by laws, are supposed to be regulators, are supposed to be superintending. And this is now where you will need to bring everybody together, your national and your subnationals. Okay, so if we just look at these three small aspects, then it is arising from the demands of these three things that you now begin to talk about infrastructure. Because anytime somebody talks about infrastructure, the thing that enters into people's mind is power. Schools are infrastructure. Hospitals are infrastructure. Okay? Death roads are infrastructure. Now, if you do not have a holistic understanding of how to develop your infrastructure and now make it what you call demand-driven, okay, you can actually make it political. And in making it political, what does this mean? A man who does not understand what it takes says, I have spent, I have built 40,000 kilometers of road leading to nowhere. Okay, you are not aligning that road into maybe an industrial park or a market or a farm or something, or a mine. Now, there's what they call load value. And if you understand load value as the basis of developing your infrastructure, the moment you use the load value component or the load value system to develop infrastructure, what do I mean by load value? If, for instance, we had 100 mines in Nigeria producing 20 million metric tons of goods that you're going to be transporting from one end to the other at probably $100 per ton. Do you know what that gives you automatically in income? Against that figure, you can actually now get, what you call investors, your angel investors, to be able to now take what you call a long-term, concession to be able to develop. So you don't even need, government remains what it is. But I think the greatest challenge we've had, and in the past 20 years, is that we have not stopped, playing politics of we are struggling to build a democracy. I have listened to the June 12th, struggle, and anybody that had been interviewed, I was part of it as a younger person, is all about let us take this thing from the military. Let us make sure that the military leaves. But there's never been any discussion on a holistic framework of what Nigeria should have, when we now got into this democracy. There's never been a conversation like that. The closest we got to it was Vision 2020, which I participated in. And I wrote a minority report to say we are building this thing all together. We must be able to identify those foundational sectors that we must establish. And I'm saying, let us take it back to my beginning, the people. How have we? But yes, in the past 20 years, to answer your question directly, I think the three greatest things that has come out of it is that, one, we've had a democracy. But for me, the greatest turning point was when the ruling party considered defeat to an opposition party. Because within that period, there were reports saying that Nigeria was going to break up. That was the most difficult part of our nation, in our nation's history. Okay? Every other thing that has happened has always happened. Talk about freedom of press, you can't gag Nigerians. Even under the worst of the military dictatorships, Nigerians had radios that were transmitting into Nigeria. Nigerians were speaking. But, we couldn't speak as freely as we were doing now. So when people tell me freedom of speech, I say, no, that is not our greatest achievement as a democracy. But let me tell you where we must look if we are going to be moving into the new, next level. We must go back to the days of the rolling plans. You know why? Because our MTEF captures a 3-year, planning process. And then after you do your MTEF, you now bring it down to 1 year, annual budgeting system. Okay? And people don't know this. When you talk about a national budget, it is just at that, federal government level. There is no synergy. I haven't seen any between the government of states and the federal government, federal budget. So what you do is that we celebrate 9 billion or 10 billion or 12 billion that are going to be spent only by the MDAs. The only aspect of it that now leaves the MDA, either they're building a new secretariat or they're doing something, is not the procurement component of it. There is nothing that links the budget of the Ministry of Mines to the Alaja village where you have found iron ore. And where the state now, as a host community, also now has a component of maybe what we call the community development agreement that now ties into that program, that now ties into now this load value thing I'm talking about, us being able to, produce enough volume for government not to put 1 naira into that rail track. And then you're able to build a rail line that can be able to take it. So, because there are so many people in the studio, I could go on and on. But what's key?
So your freedom of speech will be interrupted, right?
Okay, yes, It's been interrupted.
All right. Dr. Emeka Okengo, thank you very much. Now, Neye Akinseju, we'll bring you in here now. In 20 years, let's have your own panoramic view of the economy.
Well, I think we've had a lot of overviews and headlines. I want to go beyond the headlines. I want to look at the philosophies, the economic models over the last 20 years. In truth, I think we went back to the starting line in 2015. Principally, we had a president in 1999 that was beholden to the Bretton Woods institution. And you had a holistic, strong commitment to implementing or realizing economic policies pivoted on the IMF, Bretton Woods, market-driven, market-determined economy. And to that extent, you were talking of austerity measures. You were talking of reducing government spending. You were talking of reducing tariff on imports. You were talking of non-intervention in critical sectors of the economy. And to a large extent, the capacity of Nigerians and, of course, of the government was reduced. So much so that between 2008 and 2011, by the Manufacturers Association of Nigeria's figures, more than 1,600 companies folded up in this country by the MAN's report. And what led to that? Because we reduced import tariff, were allowed unrestricted importation of goods into the country, and of course, some counterfeit fake goods that our own production capacity here could not also compete with. So most of these companies had to fold up. Now, when you do that, the multiplier effect, started reflecting in reduced employment, in reduced engagement, and of course, in our capacity not to be able to tap into our own resources as raw materials for our own local industries. So when you look at all that put together, there's a constraint on the need to boost the population of even the poor that was stated as at 2006 as 100 million. And when I say this 100 million, I'm trying to tie it to the fact that in the same 2006, the Nigerian government paid off its historical debt to the Paris and London Club, at a discounted rate of $12.4 billion. But unfortunately, if we also look at the background to that, what exactly constituted that sum? And what could we have done with a bulk $12 billion at that point in time? Not also forgetting that at that point in time, we had an economy that was not exactly diversified. If we are talking about growth, about GDP, between 1999 to 2010, when we reached that peak, it was mainly driven by the bust and boom cycle of crude oil. One, we were fortunate that from 1999, when a barrel of crude oil was still at $18, by 2000, it had gone to $27. And it went on, of course, it fell in 2001, 2002, 24, 23, and then picked up again and reached a high of $75, $80 by 2007. So if we're talking about our growth, it was mainly predicated on the oil and gas, And if at that point in time we could pay off $12 billion that we saved somehow, I think that was a major error in the growth trajectory of the Nigerian entity. Then two, we lost momentum on our manufacturers' capacity, going forward. So much that by between 2011 and 2014, when we had that 3 years, 2011, 2012, 2013, when we had that years of consistent increase in the price of crude oil, consistently, and the average for the price of crude oil in those 3 years were $100 per barrel. And we're doing an average of 2.3 million barrels a day. But you had an inverse relationship between the increase in our earnings and, of course, the rate of unemployment. And that tells you that, principally, contextually, we were not applying what we were earning, to generating capacity in terms of employment, in terms of manufacturing, in terms of agriculture and all that. So it was evidently clear that we were heading to nowhere, So by 2014, when the global crisis, the global oil and gas crisis commenced, it was apparent we were going to run into a ditch. So when we ran into a ditch in 2016, it was clear where we were coming from. It was because, and perhaps it's because I have a proclivity for interventionist economy. I believe that a developing economy cannot be left to market-driven forces. That government must play an active role, in supporting and pushing identified critical sectors of the economy. That we cannot allow the forces of demand and supply to determine the basis of our economy. So in 2015, perhaps with the coming of this government, and of course, for me, it's like a watershed. You now have a movement away from the Bretton Woods policies to a more interventionist development, and I thought that's the mind of a doctor here, a more development economic intervention orientation, And I've been seeing that, to be sincere. So it's like starting all over. We lost the momentum between 1999 and 2014, and we need to be sincere with yourself and accept that reality, that we lost it. So we made close to $930 billion in those 14 years. Now, how do we interpret our application and deployment of that kind of resources? We should not be struggling. We should not be talking of a recession. No matter what, if we had properly employed, deployed, and applied that sum of money, now we are where we are. I think going forward, what we have been able to achieve is a strong interventionist approach. And today we are talking of our rice production. However I want to put it, there's a difference between now and where we are coming from. At that point in time, we were spending $650 million a month on importing food items into this country. By CBN figures, we have reduced that to $160 a month. That is a quantum achievement, you know. It does mean that we can now redirect that sum saved into some more other productive, sector of the economy. We have seen, of course, and again, we have seen increased activities in engaging entrepreneurship, especially the MSMEs, and the passion of government to be able to create a linkage between manufacturers, the manufacturers sector, the MSMEs, and of course the financial sectors. So going forward, I think it's a new threshold we are treading. We are treading now. I see if we are able to create and sustain this momentum, we should be able to start opening new vistas in our economic growth.
Sorry, I just wanted you to explain, that there's a portion where you talk about the role of the market forces and your views. Can you speak more to that? Because you were talking about the need for government to intervene and not leave everything to the interplay of market forces.
Yeah, for instance, Bretton Woods policy expects you not to restrict importation of goods and services into the country. Now, market forces application allows that you allow anything to come into your space, and of course compete, with those things coming in, and let the individual buyer determine what he wants to buy and at what rate and at what price. Now what the government has now done is, no, the philosophy is let us also protect our industries. Let us protect our our farmers, our smallholder farmers that we have employed or deployed through the Anchors Borrowers Program. So rather than expose them to imported rice, for instance, we restrict imported rice and give backing and momentum to locally produced rice in such a way that over time they can also be competitive. The exit point will be when they are strong enough, when we have not taught them Nigeria first, we can allow these other ones to come in when we have a strong competing brand.
Okay, so you favor some degree of protectionism?
I favor for now a strong degree of protectionism.
All right, Neya Kinsi-Joe, thank you very much. Well, there are a number of points that you have raised, but of course, the guests are many. Perhaps I would throw the question to some other guests to respond to what you said. For instance, that debt repayment was a mistake, in your opinion. I don't know if you recall what happened in 1991-92 when Nigeria had a windfall from the Gulf War amounting to $12 billion at the time, and yet, we continued in debt. But that's a point that we'll come back to either with you or with the other guests. But let's return to our Lagos guests, Mr. Tilewa Adebajo and Johnson Chukwu. Dr. Okengu here says, look, he's more concerned about the people. He centers his argument around people. But I still want us to crunch the numbers. And that's why I'm going first to Johnson Chukwu in terms of investment inflows. Just looking at the picture of investment inflows where you are also a major player, and in terms of raising revenues, raising monies, for businesses. The stock market has had a story that some would say sweet, and then others not so sweet, considering what happened in the meltdown of 2008. What has been the fortunes, if you like, of the capital market in 20 years?
Interestingly, the capital market has mirrored the performance of the economy to some extent. If you recall, the first 10 years of this democratic experience, we saw a GDP growth of about 7.62% year-on-year, cumulative annual GDP growth of 7.62% from 1999 to 2009. And within that time, the capital market also had a very monumental growth. The first 3 years of democratic experience in the country, the capital market grew at a cumulative growth rate of about 35%. Subsequently, the recapitalization of the banking industry gave another fillip to the growth of the capital market. Then we entered an economic crisis in 2008, 2009, and the capital market crashed. Subsequently, the capital market has struggled over the next 10 years. And if you also look at the GDP growth rate in the next 10 years, you saw that the GDP grew at an average rate of 3.86% the next 10 years. That is from 2009 to 2019, first quarter of 2019. But if you want to further disaggregate that, you also realize the last 4 years of the economic performance in the 20-year spectrum, we saw a GDP that actually contracted. Because if you look at 2016, for instance, you saw a GDP that contracted by 1.858%. In 2017, GDP grew only by 0.82%. And then in 2018, we saw a GDP of 1.9%. So in effect, over the past 3 years, you saw a GDP that has actually grown at less than 1.5%. And that has impacted negatively on the performance of the capital market. Because the capital market, like I said, mirrors the performance of the general economy. It is based on the earnings of these companies that determine whether the companies will declare dividend, declare profit and declare dividend. So if the economy is not expanding, then the earnings of the constituent corporate organization within that economy cannot also grow. So we've seen a situation where the fortunes of the capital market have been tied to the fortunes of the economy. On a larger scale, you mentioned the issue of investment. We've also seen a slowdown in investment flow, and that could be because no foreign investor will go to an economy that is contracting because the performance of your investment will also reflect or be a reflection of how the economy is growing. Take, for instance, Ghana. Today, Ghana is enjoying higher level of foreign direct investment than Nigeria. Ghanaian economy is just barely bigger than Lagos economy. But Ghana, as a country, enjoys more foreign direct investment than Nigeria because the Ghanaian economy is growing in the region of 8%, while as our own economy, first quarter grew by only 2%. And if I have to bring my money as an investor to an economy that is growing at 2%, I have to look at what's my cost of equity or cost of funds. Even if you take the money from Europe, the average cost of fund in European economy is in the region of 2%, 2.5%. So if I have to leverage, that means you have to borrow to go and invest in a country whose economy is expanding at 2%. I am not likely going to make returns, though I'm exposed to exchange rate risk. And that's why you are seeing slow flow of capital in the economy. And interestingly, when one of my guests, a co-guest in Abuja, was speaking, he talked about that the first, obviously the first part of this democratic experience has been a waste in terms of policies. But I've highlighted the fact that, look, the first 10 years, we grew at 7.86%, 7.62%. Second 10 years, 3.86%. And of the second 10 years, the last 4 years grew at less than 1.5%. What are those factors driving the growth? One is you have the issue of policy. I mentioned earlier in my opening remarks that the ICT sector accounted for less than 2% of the GDP in 1999. Today it accounts for 13% of the GDP, and it's the third biggest contributor to the GDP in the economy today. And it didn't just happen. It was triggered by policy. And that policy was basically because the government came up and said, we have to evolve an ICT policy that will allow foreign capital to come in and set up operations here and manage those things. So, and that's why I was at a loss when he was talking about that the private sector should not be brought in, that the government should actually provide. If you recall, we had a telecommunications sector that had just about 450,000 lines for decades. Right. Today, we have a telecommunications sector that has more than 150 million subscribers. So if the government approach is the most appropriate, I wonder whether that has not been negated by the growth we've seen in the ICT sector. Secondly, he did mention the manufacturing sector. In 1999, the Nigerian manufacturing sector grew by 3%. And that was the year we came into democracy. First quarter 2019, the manufacturing sector grew by 0.8%. So the policies, if they are in tandem, if the protectionist policies is advocating, is such that we grow the manufacturing sector, we are seeing a contraction in the manufacturing sector. And so we have to ask ourselves what works. We have seen the two sides of the coin. And for me, we've seen that in this economy, the private sector has been the propeller of economic growth. And I believe the government has also recognized that. If you look at the CBN comments yesterday, CBN governor's 5-year plan yesterday, it's very clear where the policy directions will be. And that is to support the private sector to create employment, to create economic activities, and to expand the GDP. Let's go to some of the countries that have done this so well. Take, for instance, China. Deng Xiaoping, when he became the leader of China, he said a little of free market economy is good for the system. They moved from a protectionist, communist-driven economy to a largely free market economy. Today, China has a GDP of more than $2 trillion. China has grown from a backwater economy that was dependent on food handout from the Western economies to one of the most aggressive and economies in the world. So, for me, I have a clear orientation when it comes to policy, economic policy, and mine is that the market, to a large extent, with some level of regulation, it should drive economic activities. The government has not capacity to build the economic activities that would create employment. And I think it would be a wrong advice for us to sit here and advise the government that we need a bigger government, that the government should build out the roads, government should set up operating businesses, and government should close the borders, and that we did all these things for the economy to grow. We're not going to grow the economy that way.
Sorry, Kingsley. Let me quickly take up from where Johnson stopped and bring in Tilewa. Tilewa, well, I've always heard financial analysts like you talk about the fact that government has no business in business. And you've also talked about the fact that sectors like the ICT, banking, and telecom, are, some of the fastest growing sectors because they were or have been deregulated. Now, might there be a sense in which Tilewa's, advocacy of some sort of, protectionism, protectionism resonate with you, considering the fact that even the open border system that we practice or that we are part of, has, paved the way for influx of quite a number of foreign, goods?
First of all, I think let me commend Chukwu for his comments, and I think that he's got them spot on. There are two things I want to mention before I start that, and I think the gentleman that talks about our good doctor in Abuja that talks about people, our economy, and I want to be able to understand how these figures translates into people and their welfare. Economy is growing at 2%. You have 100 million people in poverty. Okay, so you need to be able to grow your economy at 8%, and then you would have probably about 10% or 5% of your population in poverty. So that is the correlation between these numbers we're talking about and how it impacts people. So if you're focusing on growing your economy with inclusive growth at 8-9%, you will lift people out of poverty. It just makes sense, and you create a viable middle class that have what you would call spending power and consumer spending and disposable income to be able to spend and grow the economy. Companies will do well, they'll buy things. So that correlation is clear with people-oriented policies. To move on to this issue, talk about protectionism. Let's look at it and find out how it has really helped us. I think Chukwu has mentioned all the numbers to see what did we really benefit from it. Nothing. And also, I want to correct a misconception. The Bretton Woods institution you're talking about, IMF and World Bank, they are not the ones that determine your economic policies. It is us that will sit down here and determine our economic policies. The IMF will suggest to you, they have the Article 4 reviews they do, but they don't set your economic policies. And I think, as Chukwu has mentioned, You've seen the policies in the banking sector, you've seen policies in the telecom sector, you've seen now policies in the agricultural sector that are beginning to yield fruits. Why don't we as Nigerians begin to build on our success? Protectionism is good, and nobody is saying that how do you protect your industry? Most of all these things you're talking about you have the World Trade Organization, which talks about how you manage your economy. So the only thing you can do, as you see what Donald Trump is doing in America, is that you put a tariff on some imports to be able to increase that price to protect that industry. Now you talk about an automobile policy. How do we, at the point in time we used to have car assembly plants in this country, we lost that competitive advantage to South Africa. Now, how do we rebuild our auto industry? The fact is that the Japanese will tell you, I was a senior technical advisor to the Minister of Industry, Trade and Investment, and the Japanese told us clearly that if they are going to build a plant in this country, it's not about policy. We don't want policy. Put it in your laws. Bring out an automobile act and show us that these rules are in your act. If you do that, we'll bring the investment in this country, because this is a big enough market. So it is important to see how policies drive growth. So it is the policies you put in place that will drive the growth. Yes, we all believe that we need to have manufacturing capacity. Why should we import rice when we can grow rice in Nigeria? Let's talk about this rice issue we've talked about. Yes, we do have the capacity to grow rice. Take a look at how have we been successful over the years. We keep talking about it. Take a look at Kebbi State. You have a governor there who is a former banker. And I think Kebbi State came from zero to where it is today. And then what did it have to do to sustain its program? It did a deal with Lagos State, whereby they wanted to access Lagos, and then they said they had lake rice to be able to access the markets. So even if you're going to do a program, all those anchor borrower loans you're talking about, they have to be paid back. And it is only through a market-driven process that you can pay it back. And I think that's what the governor in Kebbi realizes, that he needs to also open up a market to be able to pay it up. Now, a certain company has a rice farm in Nasarawa State. That rice farm is on 10,000 hectares. Maybe that's the only one rice farm in Nigeria that is 10,000 hectares and is fully mechanized. Then you have the programs in Kebbi. But in order for Nigeria to grow, how many other companies or Nigerian people are you giving these incentives to build other 5,000 hectare farms across the country? And I think that if we begin to look at these policies and get them right, look at our successes and build up on them, then we'll be fine. What we need is stronger regulation. If you have strong regulation, strong laws, right policies, and put them in law, it's very simple. People will look at them as they've done in the past, and they'll make the investments.
All right, gentlemen in Lagos, Johnson Chukwu and Tilewa Adebajo, thank you very much. We're just getting pressed for time, as you very well know. I mean, this conversation could go on to tomorrow, and there are a number of issues that you have raised. But very briefly now, to you gentlemen in Lagos, first, Tilewa, earlier on, you said that there, Tilewa, if you can hear me now, I think our engineers are trying to clear up the lines. All right, Mr. Tilewa Adebajo, just if you can hear me now, at one point, I would like you to be very brief on this so that we can get the other guests to speak, and then Johnson Chukwu will also respond. Earlier, you talked about coordination, the need for coordination of monetary policy, fiscal policy, trade policy, and investment policy. Who, in your opinion, should be the czar that will coordinate all of this? That's one. Secondly, we have also seen, in the course of analyzing 20 years of our economic performance, that the financial services sector have not, as it were, been very great in terms of advancing credit to the areas of need, and they would therefore stimulate growth. What has also happened that, unfortunately, we haven't focused, or the capital market hasn't been able to generate enough debt to bridge whatever shortfall there has been in terms of credit from the financial services sector, and what do we need to achieve? Very briefly, gentlemen, if you can. Yes.
to drive this coordination is the president and the vice president. They need to be in the middle of driving the coordination of fiscal, monetary, investment, and trade policy. If they're doing that, I think you'll see people will respond, and it has to be very clear. That is the way Nigeria works. That's the answer to that. Then you can now have maybe a chief economic advisor that you can back up to be able to support that. Number two, very quickly, we have a lot of distortions in our financial systems. The reason banks don't lend is because of the economic environment. Nobody wants to lose depositors' funds. So if you're going to credit banks, there's excess liquidity in Nigeria as we speak today. But banks don't have anywhere to put that money. That's why they're pushing it into government securities, and the central bank is actually sterilizing money. Again, that's the issue of policies. You need to be able to create avenues, and when the economy is growing at 2%, that means that you're in a recession, most companies are not doing well, the banks don't want to put money, and the banks have their problems with their loan portfolio. So if the policies are right, you will create the right stimulus, and even if the capital markets can't mobilize this money, funds will come from abroad to be able to support it. All you need to have is a viable structure, a viable investment outlet, and believe me, people will come. It has happened before, it can happen again.
Okay, thank you. Johnson Chukwu, you want to add to that in terms of what needs to be done with regard to bridging the lending options or the borrowing options, credit and debt?
I think the starting point will be the government to reduce the level at which it's borrowing from the economy. When the government borrows from the economy, they crowd out the private sector, and this is basically what happens. Government is a superior risk to lend to. So when the government is active in the credit market, one, they bid up the price of credit, which means the government comes, borrows at relatively high rate, like what we had in 2017, 2018, or part of 2018. We saw the government borrowing a short-term market, from the short-term market or the money market at 18.5, 18.7%, which had effective yield. I mean, federal government treasury 364-day bills, treasury bills were offered at about 18.6%, which had effective yield about 22%. In effect, for a private sector operator to borrow, you have to borrow at a rate that is higher than the rate at which the federal government is borrowing, because you have to pay a risk premium because federal government risk is relatively risk-free. Federal government borrowing is relatively risk-free. So if a government is very active in borrowing in the credit market, the banks will naturally prefer to lend to the federal government than to lend to private sector operators that have higher risk. For the government to stop borrowing or reduce its borrowing, the government needs to rethink the way it is funding the budget. Today, the government, from its revenue profile, cannot fund significant capital expenditure implementation. If you look at the last 3 years, you realize that virtually 100% of capital expenditure investment is coming from borrowed funds. So what should government do? The government, in the first instance, should come up with, I've advocated this repeatedly, come up with public-private partnership arrangements where the private sector is brought in to fund commercially viable infrastructure. That will cut the government some slack in terms of its expenditure, and then will reduce the pressure on the government to borrow from the market. And that will create room for the private sector to borrow. With government active borrowing, the banks will naturally prefer to lend to the government. Also, it has also led to an development of our bond market. If you look at the active bonds in the market, it's basically government bonds. There has not been any corporate bond issued in this market in the last 2 years. Because for you to go and borrow long-term at a rate of 20-25%, you need to look at your operation and ask yourself, what's my return on investment as for me to borrow at 25% for long-term? And for that reason, you realize that the only active player in the bond market is the federal government. Federal government needs to rethink its funding arrangement. Strategy of funding critical infrastructure from budgetary allocation is unrealistic because we don't have the revenue profile.
All right, gentlemen, Johnson Chukwu and Tilewa Adebajo, always a delight having you guys on Good Morning Nigeria. Thanks a lot for your insight. We know that a lot of traffic pressure in Lagos at this time of year, always, even during the dry season. So we'd like to thank you, gentlemen, for being part of it. Of course, we'll summon you, and we hope you graciously oblige us when we return to economic issues. All right. So, Claire, let's go back to Kaduna.
Indeed. Let's bring in Professor Usman now. Professor Usman, I'm sure when the American economist, of course, Jeffrey Sachs, predicted that Nigeria would or be one of the 20 developed economies by 2025, the then president, of course, took that as a challenge, and in his vision encapsulated it in the vision 2020, which is of course by the corner. Now, in view of within the context of the stage of development of our economy, would you advocate a review of that agenda?
Before then, I need to clarify as a researcher. I need to clarify some issues that has been raised from Lagos and Abuja there. The most essential thing, they have raised the issue of the private sector and the public sector as a way of trying to drive the economy. But the most fundamental question we should ask in the last 20 years, government have to bail out the rascality of the private sector, what we call rascality of the private sector, quote unquote, by 6 trillion naira by AMCON. Most of the banks that collapse, their liability have to be dumped in the balance sheet of the central bank. And that's weakened even the central bank monetary capacity to implement monetary policy. The issue whether the Washington consensus take over the economy, it's quite clear when you look at the PSI that we are operating, the budgetary envelope we are in. And for crying loud, there is no government in anywhere in the world that allowed private sector to drive the economy. And most essentially, they gave example of China. China could not sign the WTO agreement for over 25 years. They have to get ready to get into the market. They have all their facilities to challenge the WTO doctrine. That's why they move on to the market. So there has to be level of regulations at which the private sector can be provided to establish and prosper. And mark we cannot diverge from the constitutional provision. The most second objective of the 1999 as amended constitution, it states clearly how the economy is going to be operated. So, but rather, the most essential thing is to understand who are we serving. If we're serving the people, it means that there must be a basis at which we run our economy. And therefore, we can't allow the majority of people in abject poverty and very few in stark affluence. So coming back to your question is that the most fundamental thing on that issues is how do we plan the economy? Without strategically planning a long-term plan, there is nothing we can achieve. For instance, the countries they are giving example with India, Indonesia, Malaysia, and most of them, like for India, they have 70 years continuous national plan. We started together, we abandoned our own national development plan in 1985. So it means that for our economy to prosper, to work for the people, it means that there must be an agenda at which a national strategic plan that will consistently bring the level of growth. In fact, what happened in the capital market within that period is an avalanche. In fact, it is what we, at the researcher cycle, we call it underhand dealings, whereby the banks, because they want to recapitalize, give out loan to people to buy their own shares. And by the time they give out that loan, they went back to their own friends and get clearance and get electronic certificate. And before you know it, they punch back the shares into the market and got their money and move out. So it is government that will drive the process. because all the crises anywhere in the world, when the private sector have crisis, they run to the government. It's the government that will bail them out. It happens in Nigeria. It happens even in US. So it is not issue of private sector or public sector, but there must be a guiding principles at which economic policies can be driven up. It is clear if you read the Bureau of Public Enterprise report that most of the 70% of the companies that are privatized in Nigeria were collapsed in the second year of the privatization. So what I say, it is in these 20 years we have seen the balkanizations of our national assets, handing it over to private individuals, and most of them cannot even maintain that assets. So it is not a mixed kinds of understanding. It's ideological differences that will then say either I am for protectionist or pre-liberal. But the most essential thing, there must be government-driven policies that will ginger growth to certain level. And by the way, when you want to lift out people out of poverty, it's not the private sector, it's that policy by the government that will guide how the private sector will lynch in and contribute its quota in getting that economic growth that desire.
All right, Professor Mohammed Mutaka Usman, thank you. This is Good Morning Nigeria. We are coasting to, of course, the tail end of our program. But we'll take a short break. When we come back, Dr. Kungu and Niyi will, of course, give their contributions.
All right, now, just to wrap up our conversation, let's get the closing thoughts of two guests here with us in the Abuja studios. First, Dr. Emeka Okengo. It's something very interesting you raised about food production and the fact that we have to get away from agriculture into food production. But I do recall that the then agriculture minister, Dr. Akinwumi Adesina, who is now with the African Development Bank, introduced a concept that was thought to be novel, namely that agric is not a development agenda, but it's a business. So how does this fit into the matrix of food production?
Simple. I'll just itemize because you said I have 2 minutes. One, food production.
Less than 2 minutes.
Food production is all about technology. There are now food hotels that go up to 30, 40 floors as hotels. But what you have in every floor is a particular food item, and it is automated. So you have a 60-story building that is a farm. That is technology-driven. You don't need land, you need technology. Second, what it is we need to be able to aggregate what we need to move our country forward is to look at the concurrent and exclusive list. It's very important that some items on the concurrent list might come into the exclusive list so that we can now have the subnationals and the national merge into what we call a holistic program. Our guest in Lagos, I wish they had listened, because you see, each time you talk about funds, there are 3 kinds of funds. One, there is trade finance, which is 80% of what it is we're getting. Second, there's what you now call, procurement finance. 80% of the times, they tie that procurement to goods already, produced. What China has done is to first and foremost develop the skill of its people. And then they now took a policy of everything that China, was producing in very small units were now aggregated and taken out. So what were they doing? They come in and take your raw materials and then return the finished products to you. If we are going to get Nigeria out of this, I wish I had time to be able to probably give my thoughts on what he was talking about. Indonesia has that policy. If you want to take anything into Indonesia now, be ready to pay 100,000% on whatever tax they let you bring it in. That way they are able to protect their local industries. But we have a policy, and this is my last word, called the subcontracting model, which actually was a major plank on what we call the import substitution model. Now, we are not substituting any import. We are import dependent because of the subcontracting model. And when you talk about the lake rice, it is not the grain that matters. What matters is the back end. The tractors, where do they come from? The fertilizers, where do they come from? The insecticides, where do they come from? The pesticides, where do they come from? The packaging, where do they come from? The transportation equipment, where do they come from? The storage, where do they come from? That's what makes it expensive. my closing thoughts.
Dr. Kengo, Niyi, just for you to clarify, the issue of protectionism, some would say in areas where government control has held sway, of course, we see some, challenges and all that, compared to other sectors that we've seen that have been deregulated.
I'm definitely not talking about government control in any way. I am talking about government nurturing its own domestic industries. That's what I'm saying. Government nurturing and protecting it from, of course, the assaults of goods coming in from outside. And you do this, just like you noted, by tariff, or restriction. We have 46 items now on restriction to assessing foreign exchange. That's protectionism. It does mean that whoever is coming in would have to smuggle, and the central bank and the federal government had also gone forward in a relationship between fiscal and monetary policies now to say, investigate those companies that are smuggling these items into this country, and that the sanction will be that they would not only have access to foreign exchange, but they would be banned from even opening accounts anywhere in the country. Now, that's in a way is to tell you that the emphasis, just like the federal government is hesitant in joining the African Free Trade Zone, so that you don't have secondary or tertiary relationship dumping smuggled goods into the country. What we need to do first, let us appropriately groom our local industry, our local agricultural capacity. And when it's strong enough, we can now take them out as model to face the world.
All right.
All right. Niyi Akinsijo, thank you very much for being with us on Good Morning Nigeria today.
Pleasure.
Dr. Emeka Okengo, always a delight to
Always an honor to be here. Thank you, sir.
From our Kaduna Network Center, Professor Mohammed Usman. Usman, of course, is Professor of Economics at Ahmadu Bello University in Zaria. Thank you for being with us on Good Morning Nigeria. Okay, so that does it for our program today. We'd like to thank you for tuning in. We're back tomorrow, same time, 7 o'clock in the morning. Until then, do enjoy the rest of your day. Kingsley Salamo.
And I'm Claire Delabo Abdul Razak. Bye-bye.